Hello traders, I hope you have a great week. Even though it's been a rough week on the financial market, as we already know the stock market and the crypto market is down, and this affected all of us. My crypto portfolio is down several percent. Important is to approach the thing in a long term and never invest money that you can't afford to lose. But having said that, let's jump into chart. On this video we are going to study a trend change pattern failure. As we already know all the patterns have a success percentage that can never be 100%, it's very important to understand that. We have here Dow Jones Industrial Average Index or US 30. 4-hour time frame. First thing that we notice was the break of previous lower high and a retest of this level. On the other hand, price had filled almost 50% of imbalance zone. We are going to underline that imbalance zone. They are strong levels and can be compared to supply and demand zones for the importance. Price tend to reverse after filling these zones and balance the price. Highlighting the structure as always to better illustrate it. And we have here a trend change pattern that you already seen on many of my videos. Don't get bored with it. In the end this is the market structure and we cannot avoid it. In this situation we expected a drop in downside direction the patterns suggest us. We shifted on 2-hour time frame in order to find an entry for a sell trade. We noticed a clear order block supply zone. B8 funding. You take the trades, we take the risk. Leading prop firm in innovation. Instant account delivery. Instant phase 2. Possibility to become funded in 1 day from starting phase 1. Receive 80% of your profits after 8 days, and then bi-weekly. The best user experience dashboard. Tight spreads. Unique account scaling. Scale your balance with every withdrawal. Don't miss out. Try the free trial. We shifted even lower as 30 minutes time frame in order to refine the zone, in other words, finding zones inside the major zone. We refined the 2-hour block with a smaller block located at the top edge of the major one. We are changing the color for visual reasons. We often use fib-based tool in order to find symmetrical correlations between price waves. We had a AB and 1.27 AB equals CD that correlates with the refined order block. There we are going to look for potential sell entry. Regarding the target, we chose a fresh demand zone that has an imbalance zone above it. This additional element makes this zone more attractive. We also are highlighting the imbalance zone that are located above the current price. The entry is recommended at edge of supply zone and stop loss above it. We had an important liquidity level above the supply zone. This is why is not recommended a very tight stop loss, but a reasonable one, because price often tend to create a fake out before dropping, liquidating in this way the immature sell traders. Price made the first attempt to reach the supply zone, but created a double top and dropped in downside direction. Our entry zone has remains untouched. As a result, they remains at potential entry levels. As we can see, price made a fake out in downside direction before bouncing. Price broke above the liquidity level. We removed the Fibonacci trend-based tool because the structure changed. The first imbalance zone filled, and it's time for the second one. Price finally reached the supply zone with a strong bullish candle, and then continue to consolidate at the edge of the zone. This is why it's so important not to be too greedy with the stop loss. It's one of the most building blocks in trading successfully. After the consolidation, price turned in our favorite direction, dropping sharply. Price made several pullbacks to entry level before reaching the full target. A result, one part of sell position liquidated at break-even. For other traders that missed the first entry, these pullbacks were opportunities to enter a sell trade each time price pulled back to fresh supply zone. We are cleaning the chart from past drawing in order to have a much clearer picture for future opportunities. Now let's get back to our primary setup that we started the video. Recommended broker is Longhorn FX. How to sign up? It's as simple as entering a few sign-up details and creating a password. Be ready to receive a welcome email where you can later verify your account. To secure your account, it's recommended an extra step of verification, even by call or text message. Price pullback as we expected, but the structure of the pullback and the strength of it is very important to determine it a valid setup or no. We have a very sharp pullback, and catching a falling knife is not a good idea and very risky. This is why we decided not to enter any trade in this zone. The 4-hour downtrend represents a bearish swing on daily time frame. This is why top-down analysis is very important. It gives us a better view of market sentiment and usually can save us from entering wrong trade and improve our trading edge. As we can see, we have a textbook trend change formation. Price shifted from a bullish to a bearish trend. The transition was very evident. The last higher low was broken, and then price pulled back to create in this way the first lower high pivot. Then we had the second and the current one, which could become the third lower high. Any buy trade is considered against the trend, which is too risky and have low probability of success. As we can see, the demand zone didn't hold the price, and it broke below the last low, creating in this way the new lower low. In this video you learned that should not trust patterns 100%, make a detailed analysis, use multiple time frames, find more correlations. And the last one, do not overthink too much, just use risk management, and you always be protected.